Okay. So, good evening. My name is Michael Fortin. I am a QuickBooks instructor with the SCORE organization. I've been an adult educator for, it's going to be, I think this is my 30th year. This October will be my 30th like anniversary of teaching. I have an education degree from Thomas College and was a licensed teacher and worked with primarily adult learners in the Gardner High School. Um, and that really allowed me to work with all kinds of different people who were interested in learning a variety of business topics, including QuickBooks. And QuickBooks very quickly became one of the most important classes that we taught. A lot of people were interested in QuickBooks. QuickBooks has been around for a number of years. And some years ago, probably, I don't know, 15 years ago, maybe, QuickBooks classes became a regular part of the curriculum. And then I was approached by SCORE to partner with them to teach QuickBooks workshops, and we've done them all over the state for more than, I think, 10 years now, probably safely to say, and including, in-person classes as far north as Presque Isle, and I've done Norway, Portland, all over the place. And we've, of course, since 2020, have been doing these virtually, and it's become just a great way of people to learn the material and do it in the convenience and comfort of their own home. So it's great to have you here. And this is intended to be an interactive class. Even though it's on Zoom, it's not intended to be necessarily a one-way just download of information from me, but hopefully you'll feel comfortable that you can ask questions and jump right in with anything you'd like to say. We have a small enough group where this can be, I think, very engaging. So there's some buttons at the bottom of your Zoom screen. Most everyone knows Zoom nowadays, but you have the mute button on the lower toolbar of Zoom and your video button. So if you want to turn your camera on, you can do that. If you'd like something to say, you have a question, please do not hesitate. Jump right in and ask away. You can unmute yourself. If for some reason that you have no microphone on your device, then feel free to type the question into the chat. But we're going to go 90 minutes tonight. This is a short session just to get you familiar with another great feature of QuickBooks, but also to explain just the concepts of cash flow planning for businesses. We teach these classes in a variety of different topics on QuickBooks, hopefully to kind of augment the normal work that you're doing with SCORE. If you are familiar with SCORE and if you have a SCORE mentor, it's just a great resource for different businesses to use the knowledge and experience of people who are willing to help. And I'm excited to be part of it. I am not a mentor myself, but do teach the workshops from all different kinds of businesses, from farming, agricultural type businesses, service businesses, nonprofits. I've had a wide variety of people. In the past, we used to offer these workshops for both the QuickBooks desktop version, desktop/enterprise, and the online. But the online version of QuickBooks is quickly becoming the mainstay, and slowly over time, it appears that Intuit is kind of peeling away. The other versions, they do still exist in some form, but primarily the online version is the primary product, and they've developed it over many years of making improvements, and a lot of people now really enjoy using it. So last week we had a workshop, like an introduction class on QuickBooks Online. It had more than 20 people in it. It was a really great group. And we do offer these sessions at various points throughout the year, and I'm sure we'll have other ones later this fall. So if there's QuickBooks training you're interested in, and if in specific topics, or if you'd like to see more of it, please, you can make the comment in the chat. I'll make sure that it gets to the training area and who manages training for SCORE so that they can plan those things. We used to offer these, more regularly and multiple session type offerings. It's been difficult sometimes with everyone's busy schedule to commit to like a longer class. So the more popular one we offered was like a 4-night introduction into QuickBooks, and we covered more in-depth discussion of QuickBooks and features. But again, it was just hard to get people to commit to that. So these short, like 90-minute segments are kind of a new invention that we've been piloting, and hopefully it's something that is easy enough for people to just take an hour and a half out of their evening and just sit down with us and learn QuickBooks, and we'll get more involvement that way. But anyway, so that's my intro, and I'm glad to be here joining with you. So just going to pull up some slides on the screen. Part of this will be to, I think, have you straddle between the Zoom window on your device so that you can follow along with me and some slides that I have, but also that you can at the same time use QuickBooks Online and explore when we need to do that. There'll be a time to look at the QuickBooks Planner in QuickBooks, and it'd be nice for you to do that on your own device. So we'll go till 7:30 tonight. Just an overview of QuickBooks itself is that it's a cloud-based accounting system. It operates off of a monthly fee, subscription-based service. It's available from anytime, anywhere, from any sort of device that has access to the internet. So you cannot use it offline. You must have access to the internet to access it. But there are different levels of subscriptions: simple, essentials, plus, and advanced. And I mention that because for the QuickBooks Cash Flow Planning tool, you will not have that available to you in the lower subscriptions. You must be a plus or advanced QuickBooks subscriber in order to get access to it. But don't let that deter you from joining us this evening if you don't have these other levels. The test drive that we're going to use does have it, so you'll be able to play with it, practice it. And you can use the test drive link outside of this workshop as many times as you want to just get familiar with it and see if it's something you might be interested in, if you don't have it already. And then the other thing is that the QuickBooks Online suite is, if you're not already using it, that test drive will give you a sense of whether something you think you'd like for your business. So, but so we'll be this is kind of like a not really an intermediate course workshop, if you will, but this is intended for we're not going to spend much time really introducing people on QuickBooks and how it works, because we did that last week. But if you'd like to take one of those sessions, we'll be scheduling those periodically. But even if you're not a QuickBooks user today and you just want to listen in, please, glad that you're here, and I think you'll get some value out of it. So just an overview for tonight. The topics we will cover: we'll define what cash flow planning is, a very high level. We'll talk about some really important concepts. So in fact, a good part of this may be not really using the QuickBooks system so much as to just understanding why cash flow is important and what goes into getting an accurate cash flow plan. So that's why we'll be talking about how to ensure that your data is complete and accurate, and ways we can do that. And we'll talk about connecting external accounts to QuickBooks, in other words, your bank accounts, and syncing your bank accounts with QuickBooks, and how to generate different reports in QuickBooks to analyze cash flow, and more specifically, how to use the cash flow planner in QuickBooks Online. So again, stop me if you have any questions. Cash flow planning at a high level. What is cash flow planning? Well, it's, businesses um, use this tool to manage the ins and outs of cash by using a tool called the cash flow plan. The cash flow plan is a planning and forecasting tool that helps calculate potential income and expenses to determine how much cash will be on hand in the future. So it's kind of like using all the information we have to make an informed guess about what we think will the future will look like in terms of how much cash that we have on hand. And then a cash flow plan will help budget and plan for upcoming changes in income or expenses. I like to use examples like, let's say you have a construction business, and the construction business has a large project, and you get paid, in thirds. You get paid a down payment in the beginning. About halfway through the project, you'll get paid another third of the total amount due, and then at the end of the project, you will get final payment on it. So, which is kind of standard in that kind of business. You will, of course, have to manage how to pay for things in the meantime, right? So, you have to buy all the supplies, the tools, the equipment. You have to pay for labor, subcontractors, permits, licenses, different things. And it takes money to do that. So in addition, you also have just general overhead expenses of your business, like, insurance and your internet and office or rent or different things. So something like a cash flow plan can take a look at and allows you to think about when you will get paid, when that money comes in, and compare that to when money needs to go out of the business to pay for expenses. And the cash flow plan will show you at points in time what the balance will look like. And the important thing, though, is that getting a cash flow plan and having it be useful is all dependent on getting accurate and complete information. And QuickBooks can help with cash flow planning. But it's kind of the old adage, right? That garbage in, garbage out, or the output is only as good as the input, or what have you. If you are giving accurate and complete information into QuickBooks, then you get accurate and complete information coming out of QuickBooks. So it does depend on everything depends. Not only cash flow planning, but just making full use of QuickBooks as a way of getting useful information about your business and making decisions about how it's performing is all dependent on whether all the information is being entered and entered accurately. So that's kind of the key message in all of this. So we're going to look at how that all works. One thing, and I've put this link in the chat already, and for those of you who have joined after I did that, I'll paste it in there again. But here is a link for the QuickBooks Test Drive system. So once again, I'm going to put it in the chat. And the desire is that you will click that link, and it will open you to a test region where we can play and explore QuickBooks when it's time to do that. I would also encourage you to write it down, to write this link down and save it and use it in the future. You have sometimes transactions that you're not quite sure how to enter, or you want to check out a feature that you don't currently have and you want to see how it works, or you just would like to practice entering a transaction to determine how it will look on your books afterwards to see if you've entered it correctly. All of those things might be good reasons to have access to Test Drive, because it's a sandbox that you can play in without disrupting your real information. So take advantage of it, and you can hold on to it and use it outside of the workshop. But we will be using it together in a little bit later in the evening. Okay, so one important part of ensuring that your data is complete is to make sure that all of your income information is being captured and recorded in QuickBooks. So QuickBooks has several ways of doing that. Now, we do have sales receipts, which is a form inside of QuickBooks, which is primarily used for cash customers and or can be used for situations where you have a third-party processor like Square, for example. So for those of you who might use a POS system like Square POS, and there are different products out there. Square is just an example of them that you can interface those third-party processors with QuickBooks many times, where there's a connection, or you can export information and keep them in sync so that whatever happens in Square also is known by QuickBooks. Or maybe you have just a traditional mechanical cash register that's in your store, and you want all of your summary sales information for the day to run through that. You can enter that information in to QuickBooks in a sales receipt. That's how sales receipts are used. The other way of tracking company sales may be an invoice. So if you have customers that are being billed at a later point for products or services that you're offering, meaning that they will receive services or products in advance of paying for them, then an invoice is how you do that, and you track that information inside of QuickBooks Customer Center, all the balances that those customers owe you, and in accounts receivable. So those are important sales forms to use to ensure that all of your sales information is being tracked. Both will track detailed information about what you're selling. So it's just a matter of whether you're getting paid at the time of sale or whether it's going to be a credit situation where they pay you at a later point. So that's the first thing. Make sure that all of your income is being tracked and entered into QuickBooks. Very important in the cash flow calculation. Okay. The other piece of this is, of course, making sure that all of your payments going out of the business, your expenditures, are also being recorded in the business. And there's four common situations in which
So I'm just gonna set this somewhere and let it like chug away
oh, what's that?
about learning how to use it.
Yeah, did you have a question? Somebody have a question? All right. Well, that's okay. We'll keep going. So, so these four different kind of common situations, like for example, if you write out checks, one option is to manually write out a check and then enter that check into QuickBooks by using the check register. The second way might be to use the checks window within QuickBooks to either write out checks or enter checks or print checks from the system. The third way is to use the QuickBooks Online expense forms. So if you have an expense that you need to enter, um, whatever way it was paid, that's another option. And then if you track like, bills from vendors and then pay them at a later point and use the accounts payable feature of QuickBooks, that would be the fourth item there is to, enter bills into the enter bill window, record them into accounts payable, and then pay that bill using the pay bills window, right? So, all of those situations make it possible for making sure that your expenses are entered properly and calculated in the system. Um, the other important piece of this is syncing up your QuickBooks system, setting it up and ensuring that your data is complete by using bank feeds. So not everybody necessarily will sync QuickBooks with a bank account. You can manually enter the transactions or a mix of electronic transfer of information and manual entry by the owner. So there's a couple ways in which you can get information in there, but a lot of people are using the bank feeds. So that is a system where you contact your financial institution, you use their online web portal to sync QuickBooks with your bank account. You will need to take your username and password from your financial institution and provide that to Intuit so that that system can log in as you and grab all of your bank transactions directly from the bank. If your bank doesn't participate in electronic banking in that way, most of them do, but if for some reason it doesn't, then the option does exist to import bank information, such as using a CSV file or a other type of format where you can then import that into QuickBooks. So bank feeds are there's just in making sure that you get everything and comparing it to the information that you already enter into QuickBooks already, right? So if you write out a check and you enter that check into QuickBooks into the register and then connect QuickBooks through the bank account, to your to the system and download the transactions, QuickBooks can find that check and sync it and indicate when that check clears the bank. So that information is helpful in doing cash flow projections to make sure that you have all the information you need. And then, of course, debit and credit card transactions. So not only just your traditional like bank accounts, checking and savings, but you also have other types of accounts such as credit cards, and you can sync credit card accounts into QuickBooks. Now, all of this is important in that we need to remember that bank transactions really need to be dedicated to business transactions, which brings up the topic of business versus personal. It is important to make sure that you maintain and have separate business and personal bank accounts and separate those transactions into different accounts. Why is that important? Well, it's a fundamental rule of accounting for us to make sure that personal and business transactions are separate. There are many small businesses that do operate where the business owner's personal checkbook is also used for business. But in QuickBooks, in maintaining accurate record keeping and to make sure that you get correct information on QuickBooks reports and to make sure cash flow planning is working correctly, you do need to separate any business transactions into a separate business account and personal transactions must be maintained in its own separate account. So for one thing, it's clean accounting, right? It's difficult to see how your business is performing when the funds are commingled. So that may mean literally taking a, if you want to draw money and like salary, take some of the profits you've earned and use it to pay your personal bills, that you literally write yourself a check, um, or take a cash withdrawal of some kind and enter that into the system, just like you're, paying anyone else. You treat yourself as like a separate entity. So it's important to maintain that. It is difficult to reconcile the business bank accounts without that separation, right? If you're trying to reconcile your business transactions in QuickBooks with an account that has personal and business mixed in there, you can't do it. You need to have them separate in order to do the reconciliation. Um, it is important to remember that a business is taxed separately from personal finances, right? Because you cannot write off personal expenditures, and I'm sure you all know that. But your personal mortgage, or personal insurances and things like that are not business expenses you can write off in a business. So they need to be in separate accounts. It does also simplify tax audits. So the government does do tax audits on occasion, and if you have funds commingled, it makes it very difficult and can even be a detriment. If the government can't figure out what's going on, you may end up paying more taxes than what you should. So it is important to keep them as simple and clean as possible. And it's simply easier for your accountant to manage that. Whoever's doing your books, whoever's doing your taxes, it is very confusing to have all the funds commingled. So it is important to have them separated. Okay. Um, so that's important. Reconciling of accounts, right? So this is the process of comparing your transactions in QuickBooks Online against your bank and credit card statements. And through that process, you identify any sort of errors or missing information that should be in QuickBooks Online, that is not in QuickBooks Online. And bank feeds will automate that process. So, in other words, if you use your debit card to make purchases, it ensures that you have not forgotten to enter them into QuickBooks. Or if you are going to completely rely on the bank feeds to get that information into QuickBooks, it makes sure that everything that goes through the bank is in QuickBooks. And it also makes sure that, doing that reconciliation process also makes sure that any deposit that goes into your undeposited funds account or / payments to deposit account must match what the bank receives. So I don't know if maybe undeposited funds is a term that you may not be familiar with, but QuickBooks, when it receives money, like when you receive money from a customer, a payment against an invoice, or if you generate a sales receipt, the money typically goes into a holding tank called undeposited funds, and it sits there waiting for you to deposit that money into the bank. Once that money is deposited into the bank, by entering a deposit into QuickBooks, it will move the money from that holding tank, undeposited funds, and then move the money into the bank account in which you physically went to the bank and deposited into. So if you ever have money sitting in your undeposited funds account in QuickBooks, but you really don't have any money that should be deposited into the bank, like everything has already been deposited, but yet you still have money in that account, then there's a problem. Means something's been entered incorrectly. So that reconciliation of accounts makes sure that there's no errors. Make sure that QuickBooks doesn't think there's more money expected that's not already been received. You can understand why that is an important piece of making sure that you have an accurate cash flow plan. Because if QuickBooks thinks that you're still waiting for money to come in from a customer, but you've already been paid, then the cash flow will be incorrect. It will project out that more money is coming in than actually it is, right? So, thus, it is important to make sure that your accounts get reconciled. All right. Um, and then I'm going to pause for questions here in a second. Let me do this last slide here. So, reconciling accounts, why is it important to reconcile your accounts? Well, I mean, bank feeds, right? Connecting QuickBooks to the bank can certainly increase the accuracy and the efficiency, but they are not perfect. They are not. There are still mistakes that happen. And it is a good idea to reconcile that account manually every single month. There are times when a vendor will swipe your card twice by accident, or a charge that was put on there for more than the amount it should be, or duplications or charges that don't get charged right away and are missing and then show up some months later. Like, there's all kinds of reasons why bank feeds can be inaccurate. So it is a good idea to do that reconciliation. And it's confirmation that that's been done. And if you ever develop a problem in your record keeping where the numbers don't make any sense, if you have good reconciliations, you can go back to those points in time where the reconciliations were good and give you a starting point when to, search for mistakes that may have occurred along the way. And again, it gives you a chance to ensure that the undeposited funds accounts, that they match the bank deposits to make sure that they're accurate. So, and that is the importance of reconciling these accounts. All right. I'm gonna just stop for a moment and just see what kind of questions we have. How's everybody doing out there? Let me ask this. Is anybody who
I have a
rec
question.
right ahead?
Do you know if QuickBooks can be synced with Etsy?
I don't know the answer to that question.
Okay,
So, but let me ask, so if you sell things through Etsy, is that um Etsy is kind of I Etsy is kind of like eBay for like crafters, right? That's kind of what,
yeah,
yeah.
yes, and I'm only starting with Etsy. I
Yep.
think they generate quite a few reports, but I don't know if they're generated in such a way that they can be pulled into QuickBooks. I'll have to further explore that.
Yeah. When you get money from Etsy, do they like keep some sort of small fee for the
Yes,
transaction and they just
yes.
give you the balance? Okay. Yeah. Um, so without some sort of integration, because this comes up actually I've had students who use PayPal quite a bit.
Mhm.
That same
Which
idea.
I do as well.
Yeah. And Venmo and all the other ways of transferring money, Zelle, and it may be that you are going to need to enter those sale transactions into QuickBooks. And I have a feeling that, and there's two ways of doing that. You can, like, every time you make a sale, you generally, like Etsy or whatever the source is, will give you how much you should expect to receive from it, right? They'll give you a breakdown of the sale price, less fees, tax collected, whatever it is, and then give you the net amount that you should expect to receive. So you could take those notifications or emails and enter them into QuickBooks,
Mm-hmm.
as payments, sales receipts, and then they will sit in this undeposited funds account. And then, when you either do if you connect your bank account to um, QuickBooks, then it will match those up. So
Okay,
that you'll see them. Um,
okay.
in the end, if you're missing any, right? If you say, oh, well, I was supposed to get $25, let's say, on this transaction, but I haven't seen it come through. Now you have something to alert you that there's something missing and you need to investigate it, like, email them or whatever.
Okay.
Um, but the other option is to completely rely on the bank feeds, right? And that you connect your bank account to QuickBooks, and whatever deposits come in, you simply tag it as what type of income it is into the correct category.
Okay.
But the downside, there's pluses and minuses with all this stuff. The downside is that you would never find that missing $25 payment that way, right? Because if you are expecting a payment that you never received, you may not notice it because you're completely relying on
The
the bank
bank.
accuracy. Right?
Okay.
That's so it it all is dependent on, I guess, a number of factors. If you have 500 transactions a day and it's like an incredible amount of volume, you may not have the time or resources to type in all of those things in the QuickBooks. Understood. So maybe that's an accepted risk, that you take.
Mhm. Okay.
But if you're only have a few transactions here and there, like I would always, I guess, I like checks and balances. I'm an accountant, right? So I like to make sure things match up, and using, a manual entry wouldn't be too much time. You'd get pretty quick at it over time, and it would ensure that the bank is correct and giving
Okay.
the correct amount of money. Um, the other thing to point out is that those fees from Etsy are valid business expenses to deduct, right?
Right.
So those need to be entered as expenses into QuickBooks. And if you were to simply rely on the bank feed, all the bank knows is I got $9.83. Maybe it's a $10 sale and you get $9.83 because it took a little bit off for the selling fee. You just enter $9.83 as income, right? I mean, you are missing 17 cents in expenses that you
Okay.
poured on that transaction. So,
Oh, yeah.
so the benefit of using the manual entry, like saying I should be getting $10, so you could enter a $10 sale, and then when you only get $9.83, enter in the expense transaction at that time, so you make sure you capture it. uh,
Mhm.
may be a benefit of the manual entry. So it's
Okay.
um, different things to think about when you do online sales. And
Mhm.
um, you definitely now, I mean, there are other approaches, like, I mean, if your business model was only selling through Etsy, um you could say, well, at the end of the month, I will record one transaction into QuickBooks for all the income I received and the fees that I paid, and I'll just do it once a month.
Mhm.
So you could do something like that, but it would not make it easy to reconcile your bank account, because in the bank, you're going to get hit with all these little tiny deposits throughout the month. Um, Hopefully the totals would match up, but if for some reason it didn't, then you'd have to figure, okay, which one of these 53 transactions are off, and you'd have to go investigate them, right? So there's really no way around it. If you want to get accuracy and get like really good information, and to ensure that everything is going well, each transaction really needs to be needs to be entered. And I would promote, having you enter them in QuickBooks and then using the bank feeds to like compare to make sure that they're accurate and complete. But again, every business is different, and the volume might be a big factor because not everybody maybe feels as though they have the time to do all that.
Okay, thank you.
All right, give you a long answer, and I'm
No, I
sorry.
appreciate it. You raised things I hadn't thought of.
No problem. So I'm glad you asked the question.
Thank you.
So what other questions does anybody else have?
I've got one.
Okay.
This might, I'm not sure if this is a QuickBooks question or an accounting question, but you can decide. So I'm starting a new coffee shop business, and in order to get started, I have had to spend some money from my personal account before the business account was set up. So when I want to reconcile those expenses, can I just write myself a check from the business to cover that? That's like kind of part one of the question. And then part two is it better to write one check to cover all of the costs that I like, all of the spending that I've done until the business bank account was set up, or should I split it into separate payments?
Oh, well, it's really up to you. Like, it's really just a loan from the owner.
Mhm.
And investment by the owner is a very common like first transaction in a business. So yeah, so if you took $5,000, let's say, in your personal checkbook, and you gave it to the business to seed money to get it up and running, and now the business is making money and you want to pay yourself back, really the correct accounting transaction is to record that investment by owner, right? In QuickBooks. And then make sure to record the payment back, you know, as well. And it's whether you want to do it in, you might not have all of the money, right, to make a lump sum payment. You might say, well, I'm just going to give myself $1,000 this month and only $500 next month, and that's totally fine. Doesn't matter how you decide to break it up. But it is more of an accounting question for sure, but it ties into QuickBooks in that we if you had some time at the end, like if you wanted, we could like draw out a little T account and just kind of talk about how the transaction would be entered. And typically, you could use a journal entry or I mean, if the business is going to pay you back, there should be a transaction in QuickBooks that comes from your bank account. So, like do you have separate business and personal checking, accounts set up at this point, or?
I do now, yeah, but there
Yeah.
were some outlays before
Yeah.
that.
Okay.
Yeah.
All right. Well, so now, like, make sure that bank account is in QuickBooks, the business one, and then write yourself a check or take a cash withdrawal, debit card, like ATM withdrawal, however you do it. Record that transaction to show the payment back to the owner to pay back
Mhm.
you the owner. So, and that's it's really pretty simple. It's
Okay,
not.
thank you.
Sure. Yep. No problem. So, anybody else questions? Let me go back to the so we got these little buttons at the bottom of the Zoom screen, right? I think you should have like like a reaction button of some kind. I think I think on my end as the presenter, I don't see the reaction button, but I think you have the ability to do hand gestures like thumbs up and so forth. You can use that if you want to just give me like a yay or nay. But those of you who like actively reconcile your bank accounts every month, just like give me a thumbs up or a wave or something. I just want to see if All right, I see one. Anyone else?
I haven't actually set up my business yet, so.
Yep. Okay. Well, that's a good question. How many of you, show of hands, how many of you are not using QuickBooks right now? Okay. All right. Okay. So thank you so much. So for those of you, it sounds like most of you are using it, but not a whole lot of people are reconciling, which is honesty is the best policy. It's no judgment. It's fine. But reconciliation is an important part of making sure that that you again have accuracy. And I would challenge you to go ahead and start doing that. Start with just the single, like we're August 21st now. So once you get your bank statement for August, get that statement and try to reconcile it and see in QuickBooks. The reconciliation, I'm going to open up the QuickBooks test region. You stand by here. I just need to refresh it. It's was sitting dormant a little too long. So let me open it up. That's one thing too, is if you're in the test region, a couple of things. Anything that you do inside of that test region gets forgotten, right? So if you're playing with it, if you enter transactions, and as soon as you close the browser, everything is deleted, and next time you open it, you get a fresh new copy of this practice company. So that's important to know. And the other thing is that if it sits too long and it is dormant, then it will just kind of time you out. So, all right. So let me, now that I've refreshed it, I am going to open up QuickBooks. Okay. So, if you've not already clicked the link just to see what it does, this is the QuickBooks Test Drive system, QuickBooks Online. This Craig's Design and Landscaping Services is the sample company. Just a couple of quick things about the test drive is that it is less developed than the production system. So you may find it's a bit, as my teenage son would say, is laggy, like it has latency. It is a little slow compared to the real online production system that you might subscribe to. So that's one thing. And the other is that the online test drive may look different from your actual subscription because first, this is the advanced version. So this is like this is the high-end product. So this, you get to practice and play with the high-end one to see what it looks like. It's $200 a month for this product, but it also may look different because of all the features, but they also do explore like different things in beta, like they're a proposed change in the way the navigation bar on the left may be laid out. So you may see things like slightly different menus. They're generally the same, but don't panic if you see those those differences, because that's kind of normal. But just to look at bank reconciliation, just to show you, like there's a couple ways of getting there, but I'm going to point us in the upper right-hand corner to the gear menu, okay? The sprocket in the upper right-hand corner. I'm going to click that. And that is going to open up the gear menu, and you will see reconcile under the tools column, right? So I have your company list, tools, and profile. So under tools, about halfway down the list roughly, you'll see reconcile, and we'll click that. And then we'll click get started. And look, there's even a little training video there for you if you want to watch that. But it gives you the ability first to check which account you want to reconcile. So if I want to reconcile my checking account, I make sure to select that from the drop-down list, checking, right? It asks me for the statement ending balance. So when you get your ending balance from Camden or Key Bank or whoever you use, you would enter that amount in. So let's say it's I'll just make up a number, $6,000. And then you put in the ending date. So let's say this was the July 2024 bank statement. So I enter in the date. Excuse me. All right. Then I click on Start Reconciling. And it will open up different tabs across the top, right? I have payments, deposits, and all. So it's really a fairly simple exercise because the idea from this, let me close this little window, okay, is that I see that on the right-hand side at the top of the screen, it tells me the difference. I have a $1,000 difference between the bank and my QuickBooks balance. So the idea is to check off the things that have cleared from the bank statement and get to zero difference so that they match. So I would start, let's say I start with my payments, right? So I click on the payments tab, and this is all of the payments I've made out of QuickBooks that hopefully will show up in the bank. So I check them off. There's a little check, or actually it's a radio button here off to the right. So I start checking off the one. So I look at my bank statement and I say, okay, this one is cleared and this one and this one. So I check them all off. And as I check them off, the difference amount will change, right? It will look to make sure that QuickBooks and the bank are the same. So if I want to check them all off, I'll click the button at the very top. And you say, okay, I've checked off all the payments. Now I go over to the deposits, and then I compare the deposits on the bank statement, to QuickBooks to see which one of these have cleared, right? I can check them all off. And with everything checked off, you say that, oh, I have a balance of, right now, I think it's $4,000 off. So that would tell me that I have some sort of mistake, that there is an issue between QuickBooks and the bank. It means that there's transactions missing. Either I have transactions the bank doesn't know about, or vice versa, or there's mistakes in like the dollar amounts. I've entered something incorrectly, or something has been duplicated. So then you methodically go through and like compare that statement to QuickBooks and find out where the error is, right? And I can see that as I remove check marks, the differences get smaller and smaller, telling me that some of these expenses maybe have not cleared the bank yet, right? So if I were to go to the very bottom, the most recent ones, and start unchecking them, of course, I would compare them to the bank statement and say, oh, I've checked off these things, but really they don't show up on the bank statement. That means they have not checked them. And then eventually I get to a point, hopefully, where it's much closer to reality and it's either a little off, or maybe, again, the goal is to get it to zero. And that's the basic process of bank reconciliations. Once that's done, and once you get to zero, and you don't finish the reconciliation until you get to that 0 point. So you investigate and correct any sort of mistakes. I mean, if you know for sure that you deposited money into the bank and the bank does not show it on the bank statement, maybe they put it in the wrong account. That happens to many people. All that, you have a savings and a checking and they deposited that money in the wrong account. That's a quick for the bank, perhaps to have them move that and correct it. But whatever it is, in the end, you get that down to zero. Once you do, then you can, go ahead and click finish, and then it will save the results of that reconciliation, and it will, all of those things you've checked off will then now be permanently checked off in the register to know that it is clear and done. It has already been reconciled. Or you can simply save for later, meaning I can just leave everything the way it is and then investigate it and come back and reconcile it again until I get to that point where I get to zero. All right, so that's the basic process of reconciliation. So for those of you who don't do it, give it a try. You have to start at some point. If you start with the most recent period and then work your way backwards until you've gotten this difference down to zero and you reconcile everything. So if you've never reconciled for years and years and years and years, then maybe if you do the most recent one, everything will clear, be perfect, and you've had no mistakes in all that time, and that would be awesome. But yeah, I'm going to just click close without saving and move on from the reconciliation. Okay. Again, jump in if you have questions at any point in time. I am going to go ahead and open up my PowerPoints again. It's thinking about it here. Every once in a while, again, this QuickBooks Online system will kind of slow things down. So yeah, let me close this. Stand by here. If for some reason, looks like my screen is frozen, so I'm not sure if you can still see or hear me, but if for some reason it freezes and I need to restart Zoom, you will stay right in the meeting and I will come right back.
All right. Your audio is still fine.
Okay. All right, that's good. Yeah, let's see if I can. All right, stand by just a moment. Okay, we're back, looks like. All right, except my screen looks a little funky. Looks like I don't have any eyeballs. So, all right. Well, yeah, let's go back to. All right. Hopefully you can see my slides now. All right. So, and here, I'll turn my video off because that looks terrible. All right. So, reporting. I think that's important now that we kind of get to the heart of this. Reporting is what is really the reason why you're here, and the cash flow plan. And there are reports within QuickBooks that will help ensure accuracy. So two very important financial statements that do verify the accuracy will be the balance sheet and the profit and loss, P&L. So those reports are used to make sure that things make sense, and you use those reports to make decisions about your business. So you can customize those reports and filter the information on those reports to make sure that they're useful to you and they show you the information the way you need them. You can memorize the reports. Any sort of changes that you make to the way that they appear can be saved in what's called memorize a report. There's features within the reports, such as the quick zoom feature, to be able to see numbers, like behind the numbers on reports. So we're gonna take a look, and I'm hoping that this all goes well. We're gonna like reopen test drive. Yeah, it's sometimes unfortunate that the test drive will cause a little bit of issues. So again, I apologize about that. All right. Well, I'm hopeful that you can now see the test drive on my screen again. So, we'll see. Oh, my eyeballs are back too. So that's good. All is well. All right. So, we're going to go take a look at these couple of reports and just talk about these important features. So on the left navigation bar, I'm hovering over reports. I'm going to then go into the submenu and click reports and open up the report center. So those reports that are most common are typically right at the top. I mean, reports come in, there's something like 9 different reports categories. All of them can be customized and saved to your needs. The ones that we'll look at here are already bookmarked for us under favorites. So we have the balance sheet and profit and loss. I'm going to open up the profit and loss first, and we'll take a look at it. And we'll take a look at, how these reports are useful in making sure that all your data is accurate. So it is loading. Give me a second here. Okay. So the profit and loss for Craig's Design and Landscaping Services, right? So if you've not seen a profit and loss before, it's simply comparing the income and the expenses of the business to show whether we have income or loss. So at the top of the report always is where all the income is reported, all of the various categories and the grand total of income we've received. And then at the bottom of the report, all the various expense categories that we have and the grand total, and then the comparison. So you can see that for this business, I have a net income of $1,642. And so that you say, well, okay, how can I use that to ensure that the business is accurate? So I can use the example of like the coffee shop, right, that you've started. So if you take a look at just things at high level, right? I mean, all of these things can be expanded or collapsed to give you either summary or detailed information. So if I just want to see income as a grand total, I can click the little triangle next to income on this report and collapse it down to say my total income is $10,200. As the business owner, you may get a sense to say, wow, that seems accurate, or no, that seems really off. So, do that high level look first, right? Make sure that the information appears to be correct. And that income, right, that figure is all based off of the transactions that you've entered. If it seems too high or too low, then it warrants some additional investigation. So you can click on these and expand them and say, all right, well, let's break this down into smaller pieces and see. Okay, well, I have different categories: design income, for example, or landscaping services, job materials. Like, those are different income categories. And if it looks as though any one of those is off, we can dig even further to say design income. Well, for this type of business, this is a landscaping company. So that means, I'm taking it to mean that they do design work for landscaping. And if it seems like, for the period of January 1st through August 21st, which is the date range, the top of this profit and loss, that, 2250, say, wow, I've done a lot more design work than that. That may give you, again, more clues as to where to look and try to investigate this further. So you can click on these numbers, drill down into them, right? So if I click on the number itself, it will actually give me a transaction register to show me where that number comes from. So $2,250 is a result of these transactions from this time period. And it gives you all the invoices and sales receipts where that came from. You could say, look, on July 1st, this invoice to John Melton right here by itself is $750. So that's one of the several transactions. And if you want to go even further, you can say John Melton, let me check that out. You can actually click on and go down to the transaction level itself to get to the lowest level of detail to investigate, to find out whether that is accurate information. So these reports are very, very helpful, very powerful. It helps us to determine, accuracy clearly. And I can say, okay, John Melton, design, 10 hours at $75 an hour, $750. You may determine, no, actually, that wasn't design services. That was some other category. So you can make those changes and corrections. And very quickly, easily do that. Here, I'm going to click the X in the upper right-hand corner and just close it. And I'm going to click the left arrow in the upper left-hand corner where it says back to summary report and get back to the profit and loss itself, right? So investigating the profit and loss to look at these numbers and see if they're accurate is another important piece of this. I'm also kind of thinking about like the expenses for Etsy sales, right? If I'm selling on Etsy and if I'm not recording those expenses in here, this report will be understated, right? It will show me that I actually have less expenses than I do, and it will make it look like I'm making more money than what I really am. So important that we make sure that everything gets captured in here. Anything you spend money on needs to be entered into QuickBooks. Any type of money we receive needs to be in here, right? So, but again, these are all things you can do in Test Drive. If you don't have QuickBooks already and you want to explore this, explore with Test Drive. Get familiar with how these look. Take some of the other QuickBooks offerings too that we have. Additional features, I don't spend a lot of time on this, but at the top here, there are buttons. You can see other features to like sort the information. You can customize these reports and then memorize them so that those changes that you've made to display the information are recorded and will be remembered for next time. you can't break anything, okay? With a report, you can't filter a report or delete information from a report or do anything to make it not work right. Any changes that you make never will overwrite the original version of that report. So you can always reopen the original and you never have a problem. So don't be afraid to explore and look at this information. Okay. Let's continue on here, keeping mindful of the time. There's so much we could talk about. This, the actual curriculum for like a full-on, if you wanted to get the full QuickBooks instruction, it's a 45-hour course over 15 weeks, 3 hours a week. To learn all this material. So QuickBooks is a very powerful and in-depth program. And so the 90 minutes we're covering tonight is kind of a brush on the surface of this. Just to let you know, that's why I always have to kind of watch the clock here, make sure I give you the most. Let me skip ahead just a little bit. Okay. Okay. So to look at the QuickBooks planner. Okay, so there is a little video, and I'm hoping that it's not very long. I'm hoping we can watch it together, and it shouldn't take but a minute. But there is a video. It's on YouTube. I'll actually put the link in the chat for this because it gives you a nice overview of how the QuickBooks Cash Flow Planner works. And if you wanted to explore it on your own, rewatch it anytime you can. But here, let me put it right in the chat for you. And so again, that is the link for the video, but we're going to watch it together. It really will help us understand how the planner works. So let's bring that up. All right, there we go. One thing I have to do is also share my sound. Excuse me, make sure that's on. And here we go.
Hi, this is Dan from the QuickBooks team. The Cash Flow Planner uses your QuickBooks data to help you plan your future cash flow. Let's go over what this tool does and how to use it to get a complete picture of your cash flow so that you can make informed decisions about spending and bringing money in. Let's start by looking at the tool. Select Dashboards, then Planner. You'll see what your cash flow has looked like in the past over here. This historical view is based on the total cash that has flowed in and out of your connected bank accounts, including your QuickBooks checking account. You can view either your cash balance or your money in and out. You can also change the time period. And if you go back to the cash flow dashboard, you'll notice that you have access to the same historical view of your cash flow. Let's go back to the planner and go over the true power of this tool. Over here is where the fun starts. You can see what your cash flow is projected to be in the future. The planner bases this projection on your QuickBooks data, like future invoices, bills, and expenses. So the more data you have in QuickBooks, the better this projection will be. Down here you can see all the items that are included in this projection. You'll see any future invoices and expenses that you've already entered into QuickBooks. You can edit any of these items to see what they do to your future cash flow. You can also change your projection by adding a future item, like buying a new truck. Select Add Item, then enter the date of the item, a description, the amount, and whether it is money coming in or money going out. Once you are finished, select Save. Now you can see that your cash flow projection has changed. If you see an issue like a red dip, make some changes to your future items and get yourself back on track. These items are just for planning purposes and don't affect your books, so feel free to try out lots of scenarios. That's it. Now you can start using your cash flow planner to see where your cash flow is headed.
All right, so pretty good video there. I think helps, but let's take a look at it a little bit slower and look at exactly how it works within Craig's Design and Landscaping Services. So if you've not already done so, I would encourage you to click the link and open up the test drive system. And remember that if you click the link and you are asked to log in to your own QuickBooks company information, one way around that is to paste the link into a different web browser, such as Edge or Firefox or Chrome, some other browser that you don't normally use, that should bring up the test drive system and bring you into Craig's Design and Landscaping Services. All right, so I'm gonna start at the dashboard, just as where everyone else will, and we'll see how this looks. One thing within the test drive is that there are certain things that you can't do only because we're not really connected to bank accounts, for example. So there are some limitations into the different scenarios we can play with. But you'll hopefully get the idea of what we're talking about. So if you open up Craig's Design, you get to the dashboard, you will see there's two tabs along the top. You have your Home tab and then the Planner tab, which is for cash flow planning. The video says go ahead and hover over Dashboards on the left navigation bar and then select Planner. So either way, whether you click here or up here, will bring you to the right spot. So I'm going to click Planner, just that tab at the top, and it will bring me to the cash flow planner. I'm going to go ahead and click Start Planning. Okay, and there was a little video there. It kind of explains high level how it works. All right, and then I'm going to click Let's Go. Oh, my cash flow doesn't look good. I'm already in the negative, $3,400. But as explained in the video, right, I can easily make that positive by changing the information within QuickBooks to do that. So if I scroll using the scroll bar on the right-hand side of the screen, if I scroll it down, I can see that these are my upcoming transactions. Okay, I have all of these expected invoices. So I have 13 overdue transactions. Okay, so I have invoices, bills, different things in here. So if Diego's Road Warrior Body Shop, I see there's a bill for $755, right? If that bill wasn't accurate, or if I, returned some of the merchandise there and the bill really should be less, it gives me an opportunity to try to correct that, or definitely I can update it in this cash flow projection. So you can see that on the right-hand side, if I want to see where this data comes from, you can actually click on these where it says View Nested Transaction. It will open up those transactions to bring me to them. So again, all of these different things are subject to change. Let's say Travis Waldron, if I click on it, it will open up that transaction. And let's say that the date that is due is, am I expecting that's going to be paid tomorrow? Well, if that's not the case, I can update the date in here. Say, no, actually, I'm not going to get paid until the 1st of September. So I can change that figure. And actually, we could also further just kind of hypothesize that, if I'm saying that right, that instead of this $414 transaction, really Travis is going to pay me $1,000. Well, I could update that projection and click Update. And by doing that, it will change the cash flow projection up here. So I can see as I look up, once I get into September, all of a sudden I go from in the red now to in the green. All right, so I'm positive, right? So I can experiment with different scenarios that, I can play around with these and try to like change my situation. You can say, look, between now and the end of August, it looks like I'm in the negative. Well, the only way I have two things I can do to change cash flow projection, right? I can lower expenses or raise income. So, I might say, well, listen, this bill that I'm sitting here, that Diego's Warrior Body Shop, I'm not going to pay that until next month sometime, right? I can click on it and say, no, the date that that's going to be paid is going to be over here on September 16th instead. I'll update it. All right. So now all of a sudden I have more money, right? So as I scroll, you can see that I'm still in the red, but it is definitely less so. Right? And they say no, and then maybe another change. Well, listen, this Paulson, medical supplies, the Red Rock Diner, for example, any of these all look good. But maybe this Travis Waldron, instead of the 1,000, I changed it. And they say, you know what? If I go over to Travis's place, I bet I can collect right away. So I'm going to change the date back to tomorrow. Or maybe it's tonight after this workshop. I'm going to go get him, get his money. But anyway, I update that figure and take a look at how. And you can see the projection all of a sudden has changed now between the 21st and the 22nd. You can see that today I'm, on the 21st, I'm $3,400 in the negative. Tomorrow, I'm $2,400 in the negative because of the 1,000. And then the 23rd, I'm now only 942 in the negative, and then August 24th 234, and then after the 26th I'm back in the positive, right? So maybe I can live with that. So I'm saying, okay, well, I know that I have more expenses than money, so I'll just be wary of that. But so again, these calculations are based off of the data within QuickBooks. Then they don't affect any of the transactions in the system, right? Another thing is I have this ability to add things that are unknown. So I can click on this button that says Add Item. Like maybe I'm going to get I'm going to invest $5,000 from my personal checkbook into the business. That QuickBooks doesn't know that I'm going to infuse cash into the business. I might say, well, I'm going to do that. It's going to happen tonight, and I might have owner investment, and I'm going to put $5,000 in. I can even make these things repeat. Like I can say this is going to be a repeating transaction. I'm going to put $5,000 in every single week if I wanted to do that. But we'll leave it as a one-time transaction. Well, this is money going in, and I'll save that transaction. And it will add that to my upcoming transactions. And wow, things look really good now. Look at all the money I have. I'm on the green here, right? So, again, that is not made any sort of change to my financial bookkeeping in QuickBooks like that. Until I actually physically make that transaction and enter it in QuickBooks, it is not reality. But this is all using cash flow planning as like a projection tool. So, any questions with how this works?
If you were to take that just that hypothetical of an owner's draw or owner's investment, and maybe this goes back to Lana's question earlier. Does it become a balance sheet issue or a profit and loss issue? Where would you categorize that? I've seen conflicting opinions about the account.
Like the 5,000. Well, listen,
Yeah,
an investment by owner is equity account capital, right?
long-term
Equity.
capitalization, right? Okay.
So it's balance.
Balance
It's on
sheet.
the balance sheet.
Yes. All right.
Right. And like if I was the accounting transaction for that, if I was to like tee it out, we might as well do that. Here, let me. I don't have my handy dandy pen, but I do have a little whiteboard, right? So if I were to write a T, put a T on here, I would have my capital account for the equity for the owner, and then I'd have my checking account. So if I was a $5,000 investment from the business, right, it'd be a deposit of 5,000, it'd be on the debit side, and then I would credit capital for $5,000, and that's what it would look like on the balance sheet. Over time, as I pay that off to say, okay, I'm going to pay it back, I would put a another account, probably payment to owner. I'm running out of room on the screen. Payment to owner, and let's say I made a payment as $1,000 at a time, right? So I put $1,000 over here, and I take $1,000 out of the checking account, and at the end of the accounting period, this debit would offset the credit, and that would bring the balance down to 4,000 and 3,000, like would go over time. So it's like a transaction that I would enter into QuickBooks as if I received a deposit from my personal checkbook, I would enter a bank deposit, and QuickBooks would ask me which account to put that into, and I would put it into the to the capital account that time. And then as I wrote checks back to myself, it would be writing a check, for example, instead of a cash withdrawal. Let's say it's a check. I would enter those checks and say which account would it go to, and I would put it towards that, repayment to owner account, and then the two would offset each other over time. And eventually, it would track, of course. Now, if I paid myself too much, like if I keep pulling money out of the business and pulling it out, eventually I'll have negative capital. I'll go into the negative, right? So that's why, I can, long as I keep up to date with the accounting entries, I can keep track of exactly how much that I'm investing and how much that I've paid back. So I hope that answers that question, and appreciate it.
Thank you.
So what other types of questions does anybody have? Anybody think they'd use the cash flow feature?
I think I could.
Yeah.
This was all really wonderful. I'm very grateful.
Oh, great. I'm glad.
It looks like quite a wonderful program.
It is. I think the best way is to really kind of play around with it for a bit. When you first start off, it can be overwhelming because I understand there's a lot of things to think about in terms of just starting a business, it's exciting and there's a lot of things, but there's a lot to think about, like what am I going to sell and how much am I going to charge for it and how much is it going to cost me? And how do I record these things in accounting entries, and within QuickBooks itself, how do I set up my sales? Is it going to be through a POS system? If so, will it integrate with QuickBooks? And how will the information get from POS into QuickBooks? Or, how will I make my daily entries? There's a lot to it.
Yeah.
Is a lot to think about, but just take it in little pieces. And
Well, this test drive is really helpful because I had also heard that there was a program called Crafty Base, which is an inventory and bookkeeping solution for people who sell handmade items like jewelry.
Yep.
But the thing I'm running into is like with when I buy silver and only use a piece of it, that I saw out, it just seems a little bit overwhelming how I track all of that. So, but obviously people have been doing it for a long time and there's a solution.
yeah, I'm glad you brought it up and mentioned inventory. So, and we mentioned this too last week in our introduction session. QuickBooks has kind of an okay inventory system. If you really want a really good inventory system to do all kinds of things and to track, in particular, like if you're into manufacturing or creating crafts and you want to track and do real good like cost accounting of all the different pieces it takes to manufacture some piece of art and then to sell it. QuickBooks is not known for its robust inventory system. It's kind of like basic
Okay.
stuff. But so a third-party application specifically for crafters might be a great solution.
Mhm.
That there is, of course, a cost, and that you have to factor in, that. But I have a lot of students who we do a workshop for farmers, for agricultural businesses, and a lot of them are concerned about cost. I mean, they will plant acres and acres of vegetables and things, and they want to know, like, when you factor in fertilizer and seed and water and like all the labor, tractors and fuel, like how much should they charge for vegetables, what they're selling. So the cost accounting piece is important. um, QuickBooks really cannot do that kind of advanced cost analysis. They will often use Excel spreadsheets to just keep off to the side, like
Ah,
track all the things that they spend, and then they come up with like the calculation as to how much it really will cost to produce one widget, let's say, and then they can figure out how much they should sell it for. So that there are tools and things outside of QuickBooks that can be very helpful for
okay.
that.
Thank you.
Yeah, you may find that Crafter software is the cat's meow. It's the greatest thing since sliced bread, and I hope it works out.
Well, actually, they were saying it's so micro, I mean, taken apart that it gets very complex. And
Oh yeah, yeah,
so, yeah.
oh yeah, I imagine. Well, it's um it's good to definitely do some research and see what other people use.
Yeah, absolutely.
Yeah, I appreciate that. That's great feedback. So what else? I know we're beyond our time
One
tonight.
other question, it might be a little off topic for tonight, but invoicing, right? So I have a business with all these wholesale customers who often have a very similar order, but I haven't found a way in QuickBooks invoice creation to just create a template so that I don't have to create a new invoice from scratch every time. Is there a shortcut to that? I've researched
Sure.
online, not seen it.
Oh yeah, you can make, what I usually do is to like create one invoice and then like duplicate it and then modify the duplicate so that you can, all you have to do is just change the customer name basically.
Yeah.
So, and I do this all the time with the other versions of QuickBooks. So I'm gonna say, yeah, let's just real quick go to invoices.
I appreciate this. Yeah, you might have a shortcut for me that I've been looking for.
Well, I hope so. Let's see.
Yeah.
So, um, So I got this invoice here, 1012. So if I click on the drop down, yeah. So if I click duplicate, right,
Okay. Yeah.
it's going to make a copy of it. But it will open up a brand new invoice screen identically. It won't, until I save the transaction, it won't do anything. Like, so if I cancel it before I save it, it won't duplicate it. But from here, let's say now I want to use this exact same invoice for somebody else. Now I just change the customer name to Red Rock Diner, let's say, and save it. And it tells you this is a copy right here. It tells you a little exclamation point, right? But now that I've saved it, it's done.
Now it's giving it an invoice number. Okay, its own. Yeah.
So now I'll go out and go back to the customer center, and you see now. So I have the original one, and go down. How's this? It's down at the bottom. Yeah, it's right down here. So there's the duplicate, right? So it's Red Rock Diner down further. It looks like it's sorting it by invoice number, maybe. I'm not sure. Yeah. And I'm not sure how it's sorting this list. Yeah, if I sort it by number, it puts it at the top. So there it is. So there it is.
All right. Duplicate's key. That's been hidden in plain sight there. Thanks so much.
Yeah, you're welcome. You can do recurring transactions too, like and if you click on that, it should be actually so if I open the invoice back up, more actions. Nope, right here. Edit invoice. So if I'm in an invoice, I can also make it a recurring transaction. Okay. Where it says create, there's a little link underneath the date. It says create recurring invoice, and I click that. So I could make that to be like an unscheduled recurring invoice. And you can use them as needed from the recurring transaction list. So it just kind of sits there and it will stay there. And then when I want to create one, I just go to the recurring transaction list, open it, and then do whatever I want to it, and then actually save it and create a transaction from it. So I think that might be more what you were thinking originally, is like a template of some kind. So that's
Yes. How do I get to recurring transactions list from home?
Yep. So
Gear?
it's in the gear menu.
Yeah.
I don't know actually if I click gear here, I don't know if it brings me there. I don't think so. I think this is like invoice settings. Yeah. No, it'd have to be outside of this transaction. So if I cancel it and I don't save it, I then click gear. It will be in the list menu up here, I think somewhere. Hold on.
Yeah, third down in list. Great.
Recurring transactions. So then you'll see the list of all those transactions. You would see the one that I made recurring in that list and just open it. And so in my example, I called it an unscheduled one. So it just sat there. It was just a template. I could then click on it and duplicate it or use it and then save it. So anyway.
Wonderful. Yeah, I can see this already saving us time. Appreciate that.
You're welcome. That's why I'm glad to do this. It's great to help people out. So, any other questions? As we kind of move towards the end, I just would encourage you to take advantage of some of the other QuickBooks workshops that we have. And as I mentioned, went through that at the beginning. I think this was the kind of final one this month. So there's no other ones I know of. But we should be scheduling something pretty soon. I'll be inquiring as to when we're going to offer them. Typically, we have them offered in the fall. This is the first time we've done one in August, so it worked out pretty well. We've had quite a few people. So I would say, look at perhaps September. Keep your eyes open on the SCORE website for upcoming workshops. If you're not already part of SCORE or on their mailing list, go to their website and sign up, because it's just a great resources for small businesses. So with that, I think we're done for the night. I want to thank you all for coming. It was great. Had a wonderful time and working with all of you and the questions, and it was awesome. So if you have anything I could do in the future, just reach out. My email address, I'm going to put it up here on the screen too, so you have it. We oftentimes have students who would like, oh, I was thinking about this, and something you said, I'd like to ask you about it. Right here, my email address, michaelwfortin@gmail.com. michaelwfortin@gmail.com. You can send me a message, and feel free to reach out. So with that, thank you all so much. Hope you have a
Thank
great
you.
evening.
Thanks very much, Michael. Nice job. Appreciate
Thank
it.
you.
Thanks, Michael.
Take care, everybody.